Tesla stock dropped more than 14% within days of Musk's public threat against Trump, and it's now lost roughly a third of its peak value since the feud ignited. Over $100 billion wiped out. That's not just a headline. Contracts are being canceled, factories are on hold, and the American EV market is sliding fast. Meanwhile, Canada's lithium and nickel supply chains are scaling up to meet new battery demand. Trade deals with Europe and Asia remain steady. Federal and Ontario EV rebates haven't budged, while United States subsidies are in limbo. As the US unravels, Canada's advantage grows. While America fights, Canada profits. How long before the world notices? The feud that broke the EV market. It all started when Trump blasted Musk as ungrateful and threatened to strip away his EV mandate after Tesla criticized the new tariff plan. The public exchange escalated quickly. Trump accused Musk of changing his position on the spending bill, saying Musk knew everything about it and only objected once it passed. Musk fired back on social media, denying he'd ever seen the bill and calling the process a dead of night rush job. That set off a string of bitter posts, each one raising the stakes. The real fallout began when Trump threatened to cut government contracts and subsidies for Musk's companies. Musk's response was immediate. He delayed planned United States battery investments. Overnight, Tesla shares dropped more than 14%. Analysts now estimate the feud could cost Musk $70 billion in personal wealth. That's not just a paper loss. Investor confidence is shaken, and the market is watching every move. Musk made it clear he was ready to move operations overseas. If innovation is punished in the US, I'll take innovation to countries that still believe in it, he posted. Trump doubled down, calling Tesla un-American in a Truth Social post. Then came the biggest blow. The Department of Defense removed SpaceX from 3 satellite procurement lists worth over $4 billion. That's a direct hit to Musk's government business. Trump insisted he warned Musk this would happen, claiming he took away the EV mandate because no one wanted electric cars. Musk's public rebuttal was blunt. "This bill was never shown to me even once," he said. The two kept trading shots, and the costs kept climbing for both sides. Musk didn't just talk about leaving. He actually started negotiating with Mexico, including a $2.3 billion expansion for charging infrastructure. US suppliers, especially in Michigan and Ohio, are kind of panicking right now. The auto supply chain is unraveling faster than anyone predicted. Tesla shares are now down 40% since the feud began, and SpaceX has lost access to those lucrative military contracts. Other automakers are freezing US EV investments. As Musk warned publicly, factories and jobs are already moving. Tariffs meant to protect US manufacturing are now, well, pushing business abroad. The American EV sector is losing ground as Musk looks for friendlier markets. With factories at risk and investments on hold, the question is, can Washington reverse course before it's too late? US factories are on the chopping block. Tesla has halted plans for new US factory expansions, putting thousands of potential jobs at risk. The company didn't make any big announcements. No press releases, no headlines. Instead, there was just this quiet shift away from building at home and a clear pivot toward overseas priorities. Workers who expected new opportunities are now left with uncertainty. These aren't just numbers on a spreadsheet. Real families planned their futures around these jobs, and now they're left scrambling. This isn't just about Tesla. When the biggest EV player pulls back, the entire supply chain feels it. Tesla's decision to withdraw from federal EV corridor and grant initiatives sent shockwaves through suppliers. U.S. vendors who relied on steady orders are now rerouting their supply chains through South Africa and Malaysia to bypass unpredictable tariffs. An anonymous Tesla official described the move as a firewall against policy whiplash. That's the mood right now. Everyone's bracing for more instability. Small manufacturers in Michigan and Ohio who depended on Tesla grants now face shutdowns. A single lost contract can put a supplier out of business, and that loss ripples up the chain. The auto sector was supposed to drive a manufacturing revival, but instead, the dominoes are falling. Ford and GM are watching closely, but it's Tesla's shift that is setting the pace for the rest of the industry. Musk has been blunt about his reasons. The US is no longer predictable, he posted. Between shifting tariffs, subsidy fights, and endless political drama, automakers can't plan more than 6 months ahead. That's why Tesla is now prioritizing Mexico and India for manufacturing investments. Mexico offers proximity to the United States market without the regulatory headaches. India is a massive, growing market with government incentives and a fast-evolving EV infrastructure. Both countries are rolling out tax breaks and streamlined permits, honestly making the United States look less attractive by the day. Tesla is also expanding deals with South Korean battery suppliers and Japanese chip manufacturers, sidestepping United States suppliers to avoid trade volatility. United States EV investment growth has stalled this quarter, while Mexico's EV sector is up 18%. In the background, Tesla quietly stopped applying for new United States factory permits. Meanwhile, the Mexico factory is ahead of schedule and talks in India are moving fast. The United States is, well, fading from Tesla's plans. It's not just factory workers feeling the consequences. Cities that banked on EV jobs are watching their tax bases shrink. Schools are slashing budgets. Pension funds that invested in auto suppliers are taking hits. This isn't just about one company. It's about communities across the country losing their future. The question is no longer if Tesla leaves the United States, but how soon. Canada's quiet EV takeover. While United States factories stall and investments dry up, Canada's electric vehicle sector is picking up speed. The headlines are quieter, but the numbers aren't. Last quarter, Canada attracted $2.1 billion in new EV investments, while the United States saw $800 million in cancellations. That's not just a difference in growth rates, it's a complete reversal of momentum. Companies are shifting their attention north, looking for a place where they can actually plan for the future. Ontario is now the center of this shift. Tesla recently filed for an expansion permit at its Ontario battery facility, and a new battery plant has just broken ground nearby, set to create 3,000 jobs. These aren't proposals or vague announcements. These are real projects, with workers already being hired and suppliers moving in. The reason is obvious. In Canada, companies don't have to worry about sudden subsidy cuts or new tariffs showing up overnight. The business environment is calm, predictable, and focused on long-term results. Canada's trade position is another advantage. While American companies get caught in tariff fights and shifting rules, Canada's existing trade relationships keep supply chains steady. Quebec's lithium mines are expanding. Manitoba's nickel operations are doubling their output. These critical minerals feed directly into battery plants, giving Canada a level of control the United States just can't match. There's no need to rely on imports from rivals or worry about geopolitical drama. The materials are domestic, the rules are clear, and well, the supply keeps moving. International firms have noticed. As United States policy grows more unpredictable, companies are accelerating agreements in places like Brazil and India, but Canada stands out for its stability. Senior Canadian ministers have been meeting quietly with automakers and suppliers, working behind closed doors to line up new deals. There are no high-profile feuds, no public drama, just ongoing talks about workforce training, infrastructure, and how to make the transition to electric vehicles as smooth as possible. Projections show Canada could control 60% of North America's EV production by 2030. This isn't just about growth, it's about taking the lead while others argue. You don't see Ottawa boasting or picking fights on social media. They're too busy signing contracts and building factories. Canadian plants are humming in silence. Will US leaders wake up before the factories cross the border? The contrast couldn't be clearer. US policy chaos is pushing EV investment away, while Canada's steady approach is drawing it in. Washington's tariff hammer is backfiring. Ottawa's open-door policy is paying dividends. Tesla's moves, Musk's statements, and the fallout from trade decisions are all shifting momentum north. So what should Canada do now? Do you think Canada should leverage this momentum with more incentives, or is stability enough? Let us know below, and subscribe to stay on top of North America's EV shift. Share your take on Canada's EV advantage in the comments.